Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday, and it's June 30th. Wow. It's end of the second quarter. We got end of the month, and we even got halfway through the year now. So tomorrow will be starting of the second half of the year with third quarter and a new month. Let's jump into this. We got actually a lot of economic data to go over today. All saved for the last day of the month. So today we'll start off with the personal income for the month of May and April, 0.3%. Forecast was supposed to go up 0.3% in May. It went up actually 0.4%. So we like that because obviously more people are making money. However, we got the opposite side now. We got consumer spending for the month of May. So in April, people went out and spent money at 0.4% rate. Forecast is supposed to dip to 0.1, and it did, came in right at expectations. So we're seeing that people they're making more money as we could see, but they're saving more money as well, which is, that could be a good thing too. We also got core inflation. This is the PCE number, the personal consumption expenditure. When you strip out food and energy, we get what they call the core inflation. And this is what the Fed looks at in terms of determining inflation, their inflationary numbers here. So back in April, we had a 0.1% increase in core inflation. Forecast for May was to be 0.1. It did go up 0.1%. But, however, the Fed's range wants it at about 2%. They think 2% is a good rate for to inflation to be growing at. We were at a high not too long ago at 1.8%. It dipped down to about 1.5 year over year. And now it just dipped down to 1.4. So with all these rate hikes, it's actually appears to be slowing things down, and inflation is actually going the opposite direction instead of going upwards. Now they've been kind of saying over the past week or so they think it's a temporary blip and it's going to increase later on. But we're seeing some of the economic data slowing down. We're seeing we're seeing the inflation going the opposite direction. So it kind of I think it stands to reason if that's going to be true or not. So let's continue with this. We got the Chicago PMI for the month of June. So this is the manufacturing in the Chicago region. So anything above 50 is expansion. Anything below is contraction. So as you can see, we are expanding. In May it was 59.4 and it increased in June. So things got a little bit hotter in Chicago at 65.7 on the index level here. So good news there. And then last but not least, we got the consumer sentiment for the month of June. So we had an initial reading at 94.5. Forecast was supposed to remain at 94.5, and it jumped up to 95.1. So consumer sentiment and consumer confidence, we usually get about two readings. So one about the middle of the month and one at the final, and this is our final one at 95.1. So again, good numbers overall, I think. Spending, of course, we'd always like to see a little bit more spending, primarily because it helps create jobs. It keeps the business moving, retailers, everything else moving. But, obviously, it's good to have people, have some savings for that rainy day as well. So let's go ahead and take a look at the headline news. We got the stock market's a little bit mixed today. NASDAQ, of course, only went down. Tech has been pretty much taking a beating most of this week. I think it's been down about 1%. So far, it wouldn't be a sell-off or anything like that, but it's going through a little bit of a, perhaps you could say, a correction. But again, I would expect today kind of be a slow day today because it's going into the weekend. Next week we got the 4th of July on Tuesday, so some people may take that extended time and for the 4th of July, so take off early today. Probably don't have work on Monday or Tuesday, or even maybe next week. So I would suspect it will be kind of slow going in this afternoon here. So probably not a whole lot will be going on here. So let's take a look here at the bond market. We closed upwards yesterday. We're currently down about 6 basis points. So this looks a little bit more, but it's about 6 basis points. We're still below this 200-day moving average, which would be a concern. But the good thing here is, as you saw, there's a little bit of a trend here. Now we're up here. We're not in this trend right here. Maybe if we can see this go upward, if we can continue seeing this go upwards here, we might be able to see where we might see a little upward movement here coming soon. So just be a little cautious here. Markets will be open on Monday, but they'll be closing early on Monday due to the holiday on Tuesday, since the markets will be closed on Tuesday next week. But expect a little bit of, probably some I wouldn't say necessarily say volatility, but unless there's some geopolitical things that disrupts the markets. But for the most part, I would say it's going to be kind of quiet because a lot of the big boys will be out at their vacation homes in the Hamptons and such. So I don't anticipate a lot of market swings unless you get the small-time investors kind of going in there and moving things around. So that pretty much concludes it. Today the rates are about the same as where we left off yesterday. However, if you guys want to get more updates throughout the day, just come over to Twitter. You can find me at Mike Bjork on Twitter. I do post throughout the day here. If you guys are in the market for a mortgage, just please feel free to reach out. I do help out. I am a loan officer, and I do help out clients with purchase transactions, getting the pre-approvals, sending it to underwriting so we can get the credit approval, make your offer that much stronger when you submit your offers. Also with refinances, we are doing quite a few different types of refinances of late. We're helping clients with going into from a 30-year to a 15-year fix. We got clients that are adjustables that want to get out of them and go into a fixed rate. We also got clients that are simply taking money out and repositioning it. We had one client that was tired of looking for a home, another home upgrade, so they're just going to go ahead and add on to what they currently have. We have another one who's an investor just taking money out in all his properties and want to buy more properties. And we got other people that want to do debt consolidation, just wrap up their credit card, auto loans, stuff like that, and just have one payment here. So those are just different examples out there. And if you want me to take a look at your scenario, please feel free to, again, reach out and I'll see what I can do to help you guys out. You guys have a great day. Enjoy your weekend, and we'll see you guys on Monday. Remember, it'll be a short day on Monday. Take care. Bye-bye. Thanks for watching. Bye.